Hi everybody, welcome to the offices of Attract Capital. I'm here today with Dave Barnett, CEO and founder of Attract Capital. My name is Sonia and we are here to talk to you today about mezzanine financing, and our topic is Mezz. To Mezz or not to Mezz? That is the question. First off, let's talk about the word mezzanine, Dave. That's a weird word.
I hear you, Sonia. It is a weird word, and it stems from, if you've ever been to the theater and you've sat in the mezzanine, if you couldn't afford the orchestra seats,
Right.
but you didn't want the cheap seats in the balcony,
Right.
the mezzanine is the middle part of a company's capital. Mezzanine loan sits in the middle part of a company's capital structure. Just like if you're in the theater, if you're in the mezzanine, you've got the orchestra beneath, and you've got the balcony above. Mm-hmm. It's a very fancy, artistic word for a great form of capital that we're going to explore today. But I agree with you, it's got a lot of syllables, it's got two Z's, and we're going to shorten it for the benefit of the Attract Capital viewing audience to Mezz. Okay?
Mezz, yeah. If you follow us on Facebook and on LinkedIn and on Dave's amazing website, which is very informative, you're going to see the word Mezz. So every time you see that, you know we're talking about mezzanine financing.
Absolutely, and we didn't mean it to be quite as existential, because this is a line, to Mezz or not to Mezz. That is sort of a line from Hamlet, and it's like to live or not to live. We didn't want it to be so. It's not. It's meant to be a happy, uplifting discussion of Mezz. We don't want to be brooding and existential, right, Sonia?
Right, that's right. We're very positive when it comes to mezzanine financing, and we want you guys to be positive too. So can you explain to us what are some of the key benefits of mezzanine funding for companies?
Well, as I said, if you think about it in terms of three layers, Mezz sits in the middle. So at the top of a company capital structure, you'll have a bank loan, okay, which is usually the first type of loan a company will have. And at the bottom of a company's capital structure, you'll have an equity investment. So the Mezz sits in the middle, and it's a hybrid form of capital. It has elements of both a loan and it has elements of equity. I think it has the best of both, and it leaves the negatives of both debt and equity outside of its equation. So I think it's a great way, it's a great form of capital. I'd say if I had to put my finger on a few things that really differentiates Mezz, it is patient, long-term capital, and patience is not something that's commonly associated with lenders. Most lenders, particularly banks that are making loans to companies, they're short-term focused. They put the money out, they want the money back. They want it back in 2 years, they want it back in 3 years. Mezzanine lenders are long-term and they're patient. They are being paid to be patient and to be supportive. So we've almost developed an acronym, because we've been talking about the virtues of mezzanine financing for about 30 years, Sonia. And the acronym we use is that mezzanine is flexible, it's patient, and it's supportive. It is FPS. And it really is, the key to it all is that it's designed to fund transitional phases in corporate growth.
So I just have a question about the flexibility aspect.
Sure.
Does that mean that they will adjust the payment schedule for the company depending on its current situation?
Well, that's a really good question, Sonia. Going into it, they are flexible in that they don't require any principal repayments. Unlike a bank loan, if you get a bank loan, they want the principal paid back over a 3-year or 4-year time frame. But mezzanine loans are typically interest only for a 5 or a 6-year time frame. So you don't have to pay back the principal, which is even better. Now, they do give you the flexibility that if you want to pay something back early, you can. But it speaks to the strength of what mezzanine financing is. It's very versatile, it's very tailored, it's very bespoke, which is one of the things that really makes it a star in funding a lot of the acquisitions that our clients bring to us.
So it's far more flexible than, again, banking when you get a loan from a bank, and they're far more rigid, far more demanding.
Right. Banks, I mean, I wouldn't paint that banks with a total broad brush, because there's a lot of banks that are flexible, but I meant to say banks, not blanks, but the banks that are flexible, but mezzanine lenders are much more flexible and much more patient. And the key is that, and we're going to get to this a little later, they see the business as a cash flow value. They see the business not as an asset value, but as a cash flow value. So in order for them to get to that point where they see the business as a multiple of its cash flow, they've got to do a lot of thinking about customers, products, markets, management, so they become smart. And because they become smart, if you get into a tough spot with your business, let's say you lose a customer, or let's say you miss a quarter's worth of your budget, you can go to your mezzanine lender, and they're smart, they've done their homework on your business. You can have an intelligent conversation with them, and usually they'll act rationally, and they'll stay with you, and they'll work through whatever issue you have. So you don't always have that option with a bank. Banks are more binary. If things are going well, they'll be supportive. If things are not going well, you probably don't want to have a bank loan outstanding. With mezzanine, there's lots of room to the extent that the outcome isn't rosy. They'll hang in there and they'll be supportive with you over the long term.
So they're almost like a silent partner for you.
That's a good way to look at it. Exactly. They are very partner-like in terms of the long-term support that they provide the company. I would totally agree with that.
Okay, great. And what are some uses that you think would be the best for mezzanine?
Well, the most common uses that we see to attract capital are acquisition financings, and that could be one business buying another business, or perhaps a fundless sponsor buying a business. And the nice thing about using mezzanine is that if you structure it properly, it almost gives you all the money that you need to close your acquisition. Because a lot of acquirers think they need to bring in a private equity sponsor in order to give them the equity in the deal. And if you get the right mezzanine lender and you structure your deal the right way, you almost can bypass the need to have an equity investor, which is a really good thing, Sonia, because equity investors can be very, very expensive and can take a lot of your shares.
Ah, interesting. Are they also more controlling buying,
Equity investors, private equity investors usually take a controlling position of the company and have a controlling position on the board. So absolutely, they're more controlling. Mezzanine lenders are generally more passive. They're more relaxed about the company. They have covenants that the business has to abide by. And even if you miss a covenant, as long as you're paying your interest and as long as they think the business is headed in the right direction and they have comfort in the management team, which is an extremely important point. If they feel good about the management team and the quality of the growth plan, then they'll be in it for the long haul.
Okay, great. And how do you determine as a company if mezzanine is really the right fit for you?
Well, I'll answer that in 1 second, Sonia,
Okay.
but I wanted to get to this. So we talked about the uses of Mezz. So acquisitions is the most common, but you also have expansion financing, where if a company is growing, so if a company is growing into a new region, if a company is launching a new product, if a company is bringing on a whole new dimension of business development, they're going to need a lot of money. And if they go to the bank, a lot of times the bank will say, well, we'll increase the line of credit so you can get an extra $500,000, or we're going to give you a loan against a piece of equipment. But with a mezzanine lender, you can really map out what you want to spend the money on and go to the mezzanine lender and feel empowered to know that if they give you the money, that you have the discretion to spend the money according to your plan.
Okay, and what about a partner buyout? I assume that's another?
Absolutely. So mezzanine is great for one partner to buy out another partner because it's less dilutive than equity. So we see a lot of partner buyouts where you might have one partner that owns 50%, he wants to buy out another partner that owns the other 50%, and it works really well. And the reason it works well, and we're going to get to the structure and parameters in a second, but when you're providing loans to businesses based on their cash flow, and you're selecting a multiple of that cash flow to determine the size of the loan, you can usually facilitate all the money that's needed for an acquisition, all the money that's needed to fund an expansion plan, or all the money that's needed for the buyout. So it's a very holistic way of funding whatever capital need a company happens to have throughout the various phases of its growth.
Okay, so also if you're a business owner and you just want to expand, or your business is growing and you don't have the resources to manage the new influx of business that you're getting, which is always a good thing, Mezz is also a great option for the business owner that needs to grow or needs to expand its capacity.
Absolutely. Capacity expansion, regional expansion, product expansion.
New hires.
New hires, research and development. If you're changing the business model and you're going from a sales model to sort of maybe a lease model where you're going to have more equipment on site at your customers, or if you're doing something different and it's going to involve a lot of what we call growth capital on the front end, then absolutely it's great for that.
Okay, so let's go back to the question I had asked before.
Sure.
What is your checklist to determine, you need money, is Mezz right for me?
Okay, first and foremost, Sonia, is it transformational?
Okay.
Is it a big step? If it's not transformational, if it's not a big step, you could probably get the money from the bank. And you should go to the bank, and if the bank will give you the money, that means it's more of an incremental, not a transformational step. So it's typically, you have to look at it and say, is this transformational? If it is, Mezz is great for it. If it's not, you can go to the bank. And the other way to look at transformation is just how is it going to increase the size of your company? So a lot of times companies will be looking to grow 10% or 20%. Well, I see transformational growth as being at least 50% of the size of your current company. So if your company's doing 10 million and you have the ability to go to 15, or if you're 20 million and you have the ability to go to 30 million, that's a big step. That's something that you should consider Mezz for.
Okay. And what about your company size? Does that, the size of your company, whether it's mid-size, small, micro, can any company?
That's a really good question, Sonia. So for institutional Mezz, the smallest loan size that you can generally bring in is $5 million. Okay? Over in Europe, it's £5 million, or 5 million euros. It's pretty much denominated in the same currency.
Okay.
But I would say that it's 5 million, and the company size is generally 15 million in revenue or turnover, and 2 million of EBITDA is pretty much the company size. But I'm going to take a step back here, Sonia, because I think one of the key elements of is Mezz right for your particular growth phase is it multi-year? Is your project a multi-year project? Is it a project that you are going to be able to complete in 30 days or 60 days, or is it something that is going to stretch out over the course of a year or two? Because Mezz is best for multi-year expansions, whether they're acquisitions or whether they're organic growth initiatives. That's what it's best for. And the reason it's best for that is because when you're doing acquisitions, there's a lot of unknowns. When you're doing expansions, there's a lot of unknowns. And when you have a large set of unknowns, when you're looking out at your business over the next couple of years, you want to make sure that you're working with a supportive capital provider. So it's almost like a seesaw. The higher the level of unknowns, the more supportive you want your capital provider to be. If you're taking less risk, then you don't need your capital provider to be that supportive. You can use a bank, and the bank will give you the money, and the bank will want the money back. But if you're taking a lot of risk, and there's a lot of uncertainty as to what the visibility profile of this big project is, you want to make sure that you've got a lot of support, you've got a patient capital provider.
Okay. And what about your goal by way of growing your company? Like, say you want to double the size of your company. Does that determine whether or not you want to go with Mezz versus a bank loan?
Well, doubling the size of the company, absolutely you would want to consider Mezz, because that is transformational, and that will involve a great deal of risk, because there's going to be pain points as to hiring more people. There'll be pain points in terms of getting new space. There's going to be pain points in terms of bringing up more products and increasing capacity. So with all those pain points, that all has to be managed. That means that you have some serious execution to look at, and it also means that you really need to, you're going to have risk associated with all that execution. So you absolutely, the way to think about it is the more unknown factors you have in your equation, the more you want to take the risk out of the equation, the more support of the capital provider. So really what mezzanine gives you is an insurance policy against things that are going to go wrong, because inevitably things are going to go wrong.
That's an interesting way to so you have that, it's almost like a flexible cushion almost to kind of guide your ship
Sonia,
through a wavy sea almost, right? You don't know what you're going to encounter. Is it going to be a storm? And it's sort of there for you, keeping your ship afloat and helping you.
That's a beautiful expression, Sonia, a flexible cushion. That's what mezzanine is for you, because inevitably, as a company, you're going to run into a rough spot. Something bad is going to happen. Things are going to take longer. They're going to cost more in order to get them where you want to go.
Right.
A mezzanine lender is a flexible cushion, and they will work with you. And best of all, if everything's going well and you have other things that you need capital for, let's say if you did one acquisition, but you want to do a few more acquisitions, they'll give you more money. So they'll fund add-on acquisitions. So it's not just a sort of a one-trick pony. They're not just going to give you money for the first deal, but as a flexible cushion, they'll continue to advance you capital as long as things are within their risk profile.
I have a little question now.
Sorry,
everybody. So what if you're, you're a fisherman, and all of a sudden you want to completely change direction, and you want to be a gold miner. You want to do something completely different, a total different industry, everything. Will Mezz be there for you with such a
well, if you were
strategic
funded
shift?
Well, Mezz lenders typically don't fund fishing businesses, but if they did, theoretically, if a Mezz lender funded an aquaculture or a fishing business,
right,
and all of a sudden they had a severe strategy shift in the business and they want to become a gold miner, if there's that much potential variability in the business that you want to become, you probably shouldn't choose Mezz. You should probably fund your fishing business with equity, because then you're going to have more latitude to completely change things and kind of adopt a completely new business model if the first one doesn't work out.
Right.
You happen to pick two industries, Sonia, that Mezz lenders will never touch. They'll never touch fishing, they'll never touch mining, but assuming they would, I get the point that the switch, the abruptness, and the starkness of the contrast between those two, it really wouldn't work.
Yes.
Mezz lenders like variations on a theme. Okay.
Okay.
Variations on a theme. What do I mean by variations on a theme? So if you're a technology company and you're in one part of the country and you want to become a bigger technology company, if you want to buy other businesses, if you're in the Northeast and you buy a business in the Southeast and you buy a business in the Southwest and you buy a business in the West Coast and the Northwest, variations on a theme, all those businesses might be slightly different, but they're all IT technology companies. They all provide a service. That service, the nature and the thrust of the value proposition to the customer is all pretty similar. Maybe they're a little bit complementary in terms of the things that they're covering, in terms of their technology, but it's variations on a theme. Mezz doesn't like, apples and oranges. We're in the apple business today, we're in the oranges business tomorrow. It really doesn't like that.
Okay, all right. Are there certain industries, though, that Mezz prefers?
Sure. I would say any business, traditional manufacturing businesses, traditional distribution businesses, technology businesses, business service companies, healthcare businesses, even contracting businesses. We recently funded a mechanical contracting business. So I'd say any business that is possible to be understood through its customers, its products, and its cash flow has good management and has strong growth going into the future. There are some notable exceptions. Fishing, mining would be two. Agricultural businesses more broadly, and real estate businesses more broadly. Those would be sort of the exceptions.
Okay, so I'm just going to recap now. To determine if Mezz is right for you, is the project transformational? Will it be rather long-term, take 2 to 3 years? And will it increase your EBITDA 50%? Is that
very good, Sonia? All about the EBITDA. We're all about the EBITDA. We're all about mezzanine increases EBITDA.
Great. So I guess we've really covered a lot of ground with Mezz, but in short, can you just kind of surmise why you think it's a great solution?
Well,
in like 3 sentences.
I've built my business on the greatness of mezzanine. I think it's the best form of capital out there because if you structure it properly, you can do most of the things that you would use equity for, but you can pay a much lower cost because it's debt. So I'd say it's great for you because you're going to get more money from a Mezz lender than you will from a bank because the loan is based upon cash flow. And you also get a smarter, more intelligent funding partner that can help you through tough times, which is really invaluable. It's almost like having an insurance policy that you can cash in when times get tough. I think also, for a lot of my clients, they get the money they need when they need it the most. I hear from a lot of my clients that, well, I went to the bank and they want to give me money when I don't need it, but when I need it, they don't want to give it to me. Well, a mezzanine lender wants to give you all the money you need when you need it on your timeline. It's not up to the mezzanine lender's discretion as to when they're going to give you the money. You control the timing of when you're going to get the money. So having that power is very important.
I didn't realize there was such control and flexibility with that.
Absolutely. If you qualify the loan, you're going to get it. They're not going to say, "Well, come back to us when you need it." They're going to say, "You qualify for it. We like the cash flow. We like everything about the deal. Here's the money." What I also think is great about mezzanine is that it's highly tailored. So you can use it for any number of things, and you can flex the structure in any number of ways. It's not uncommon in the same deal to use mezzanine for an acquisition, to use it for some growth capital, and to refinance an existing loan that the company might have on its balance sheet. So it's very versatile. And then more specifically, you don't have, and we touched on this earlier, you don't have to make any principal payments for 5 years. You basically pay back the principal on the back end in a balloon. So all that cash that usually is going out of the company, if you're paying back the bank loan, you keep it, which is really, really helpful.
Yeah, it's fantastic.
And significantly, in addition to that, not only do you keep the cash, but banks, pretty much every bank loan that's made today, banks want personal guarantees. Okay?
Oh, yeah.
Mezzanine lenders do not require personal guarantees. I repeat, mezzanine lenders do not require PGs. That is a huge advantage for most borrowers, because you get to a point where if you're doing something transformational and it's multi-year and you have a lot of unknowns and there's a lot of risk, if you can get a loan that's going to be patient, flexible, and supportive and not have to provide a personal guarantee on it, you're really covering all the bases and ticking all the boxes.
That's great. That's a great, summarization there. And what are the keys that you need to raise mezzanine?
Well, there's a number of keys, but if I had to boil it down to 3 or 4, you really need to have clean numbers. You can't have numbers that are so loose that they're falling off the page. So trust me, a lot of companies have loose numbers. You need tight numbers. They should be audited or at a minimum reviewed. You need to have a certain size. You need to be over 15 million in revenue and over 2 million in EBITDA. You need to be looking for at least 4 to 5 million in check size. So the loan, there's a minimum loan size. Your Mezz is not available for amounts less than $4 or $5 million. You need to have a really good presentation, okay? A lot of companies go into this Mezz search process and they're like, well, I've raised money from the bank. I can engage with a Mezz lender. I know what they're looking for. I know the language. I know the information requirements. It doesn't really work that way. Mezz lenders are different than banks. They use different language. They have different information requirements. They have a different engagement strategy. You need to know how to navigate that if you're going to effectively interface with them and position yourself as a company that's Mezz worthy. Just because you know how to speak to a banker and give them information doesn't mean that you can make the leap. So you really want to examine your team. You want to examine your advisors and make sure that you have the right advisors on your side, because you need to have a very good business plan. You need to have clean numbers, and you need to be able to articulate your story in a very compelling fashion.
So it's really a lot of work, it seems. A lot of paperwork, a lot of back end, a lot of prep time, making everything just great.
Well,
let me just ask, this is what, in effect, Attract Capital does. Right. You manage all of that.
Right, so we do it end to end. So we're helping our clients structure the deal. We're helping our clients create their materials and their presentation so that it's very strong and it's very compelling, and then we're managing the process for them. We basically become an extension of senior management to help them navigate this process, because it's hard for management to disconnect from their daily activities and to learn all the things you need to learn in order to be able to do this successfully. Because you do have to target quite a number of mezzanine lenders to get multiple term sheets. So, we'll target 10, 15, 20 mezzanine lenders. We'll get 2 or 3 term sheets. It's a lot of work, but we've been doing this for close to 30 years. I've been doing it at Attract Capital for the last 17 years. So we've developed processes, we've developed workflows, and we have a lot of tools involved in it so that there's a lot of efficiency in what we do.
And what is the time frame? Say I'm coming to you, and I do not have a fishing business or a mining business. I have a marketing company, and I need
They don't like marketing companies either, Sonia.
Darn it! Okay.
No marketing companies. No, I'm kidding.
I'm a technology company, and I need to quadruple my growth. And I come to you on the beginning of December. What am I looking at, time frame wise?
Generally 45 to 60 days.
Oh, that's fast.
Yeah.
That's really fast.
If it stretches longer, it's because the numbers aren't ready and the company doesn't have their information organized. If you have your information organized, it can go 45 to 60 days. If you don't have your information organized, and if your financial statements are not clean, it could take 60 to 90 days. And sometimes deals can even take even longer than that because just if people aren't ready. So preparation and readiness and looking at all the things that have to be in place to be able to engage constructively with these lenders is really important to do.
Okay, and bank loans take longer, the same amount of time roughly, or?
Well, again, it really depends on the quality of the financial information. Most middle market companies that we deal with, I want to say 50% of them are audited, the other 50% aren't audited. So the amount of time it takes a bank to get through a deal, a bank is still going to send in their accountant. Right. They're going to do a quality of earnings review, much like what a mezzanine lender is going to do. They're going to have an internal approval process. A lot of the timing factor really comes down to how quickly the bank or the mezzanine lender can move and how quickly the prospective borrower can organize their information. If you have everything organized, if you have everything in a data room, and if you know what the lender's going to be looking for, then you can fly through this process. If you don't, and it's a learning process, it will take a bit longer, but that's what we're there to help people with, to help them understand what they're up against so that they can qualify and they can provide all the information that's needed.
Thanks so much. This has been really, really informative. Do you have any closing tips for our audience with the Mezz, to Mezz or not to Mezz?
Well, I would say always to Mezz, always to Mezz, always to Mezz. And I would also say you want to make sure you have clean numbers. You want to make sure that you've thought deeply about the amount of capital that you need. A lot of times we see companies come to us and say, I need $3 million. After we spend some time with them and advise on all the things we may see they need capital for, they may need another $2 million. So you want to think deeply about the capital that you need. You want to make sure you have clean numbers. You want to take the time to understand the mezzanine lender and the language and how to engage with them. I mean, it's not something you want to rush into. And you want to make sure that if you're doing this on your own, if you're not bringing in an advisor, you want to make sure that you are going to at least 10 to 20 lenders because you're going to need to knock on a lot of doors to be able to have some success. So I think it's all about having good numbers, having good process, understanding the inherent nature of what the Mezz lenders are looking for, and covering the market. It's like anything.
Thank you very, very much, Dave. This has been a great conversation, and thank you to everybody who's joined us live on Facebook. You can reach Dave anytime through his website, www.attractcapital.com. You can message us here, right here on Facebook. You can find Dave on LinkedIn, and we look forward to seeing you next month when we have our next free webinar up. Right, Dave?
Sounds great, Sonia.
All right, thank you very much.
Goodbye, everybody. Thanks for tuning in.